welcome back for another video. Be sure to like and subscribe, and let's jump right into it. In this video, we're just going to talk about my SPX500 trade from yesterday on Monday, May 12th. We're just going to go over those two trades that I took, what I did right, what I did wrong, what mistakes I made, and what I could have done better. So this was all called out and taught in the Market Mentors Discord community. So if you guys want to see all of our analysis, our new positions, our winning trades, you just want to interact with us, then click the link in the description and I'll see you guys there. And just getting back to it, I'll look at the live scenario show yesterday. So looking at it in live time, what I was looking at was there was a lot of bullish structure at market open and in London session as well because of the whole tariff deals with China and everything. So there was a lot of bullish pressure there. And looking at it when we got the pre-New York session around 9:30ish, I was pretty much just looking for buys because I didn't want to just start selling off of all this momentum. And I was thinking we would probably continue bullish for the most part. But however, once it started seeing like these SMAs crossing, I started seeing price trying to switch the downtrend. And looking at this, I started to realize it possibly could go bearish here. So looking at the 1 minute, this is what led up to the first mistake I made with my first trade. You can see that it started to give some kind of larger legs for bearish momentum, bearish structure. So look at this, it's kind of a huge reversal. Then it gives us a second leg here that is pushing to the downside. And then we get a potential third leg here where it kind of sweeps this liquidity and starts to distribute against the downside. And my first mistake was that I jumped the gun on this trade for the higher time frame structure because this is the higher low that price was playing within earlier. Once I saw it break down here though, I kind of jumped the gun on the 15-minute structure, assuming that this was a full bearish break. And I kind of just assumed that it would continue to be bearish here. So you could see this wick is what it ended up being. It was not a full structure break. It just ended up being a liquidity sweep of all this liquidity here. So this was improper to take because the structure is not fully bearish yet. Still within this range here between these two, this low and this high. So this was pretty rushed on my end and I shouldn't have taken it. That was the first mistake and indicator that I should not have taken this first trade. And the next one was I didn't like how price retrace back to my entry. So ideally I'd want this trade to push down, have this distribution, then I'd want it to retrace back without forming any new structure and then tag me in and then try to play around and do whatever it does and then go to take profit or a stop loss, whichever one happens. But with this one you can see it kind of went down, then it started to form new structure here. So it formed this lower high and this higher low, then it formed another lower high or a higher high at this point because it took this high out. Then it formed another higher low here and it just kind of plays around, makes new structure. Once I saw this happen, especially down here, I should have deleted the order. But I tried to just have some patience because it sends a 1 minute time frame. I tried to keep like the 3 minute time frame in mind, but it wouldn't really be any structure like that. But try to keep that in mind, and it ended up being correct. It just kind of formed the new structure, and it was pretty invalid. So looking back at when we see that it pushed up and started to have a lot of drawdown for this trade. Then once I saw that it started to form or break this structure, broke this high, I kind of knew that it was transitioning structure, potentially. Then we saw it kind of reverse back to the downside. And understanding that price moves in waves of 3, I could understand that, okay, once it got to this third leg, if it breaks this leg, it should, in theory, probably give us a big push to the downside if it's going to be a valid trade. But then I saw that it started to reverse back to the upside here. That's when I kind of knew it would switch at this point. That's when I knew it would probably switch bullish. And that's what also when I checked this structure and actually verified that it never closed below this leg here, and it was just a liquidity sweep. It wasn't a bearish structure break. So then just looking at it, once I saw this reversal here, when I swept this liquidity and reversed back to the upside, breaking these highs, then I saw that it kind of gave us another AMD model here, but it didn't give us an entry because there's no imbalance here. I waited for the next AMD model, which formed between this candle and this high, and it gave us a lot of inside bars. It swept this liquidity here with these wicks. Then I saw that this broke to the upside. That's when I knew to look for a bullish entry. This could be looked at as a hedge, but this really is the ideal optimal trade of the day. So this is probably the only trade I should have taken, not this one. And then you can see with this one, it came back to the entry pretty perfect in the scheme that I'd wanted to. So it kind of just went straight up, had this distribution, and it came straight back to entry as opposed to forming a new set of structure like this entry did, and this is why this one ended up kind of being a loss. It was kind of invalid with higher time frame structure and lower time frame structure, but then this one, it kind of matches the higher time frame structure and then matches the lower time frame structure as well. Just keep forming the higher lows, higher highs, liquidity sweep, then it forms a higher high, comes back and tags it in, and then we see it pretty much just goes straight to take profit. It really didn't have any drawdown, and then that was the winning trade of the day. So those are some of the things I could have done differently, what I should have done, and how I should have done, what I done right, what I should have done better. So I should have just had one win for the day, one trade of the day, but it's all good. I just kind of rushed into it, was a little preoccupied, but that's a lesson to take with me for the rest of the week as I prepare to get ready for this next trading day. So hope you guys like this video, like and subscribe, check out some more content on the channel. Be sure to join Market Mentors, and I'll see you guys in the next video.